traders, Raghee here. I want to do a couple things in this video. So first of all, let's make sure we talk about the day trading using hourly price movement ranges and Pingala, both processes that I've shown you all in previous free videos. And then let's also talk about the FOMC, where expectations are in terms of the rates, and why the rally, especially in the NASDAQ, can't be considered a comeback, but rather really a continuation of the larger move. And that's why we've been most bullish in tech and tech stocks. All right, so first of all, the day trades for today. I was probably a little bit more active than I should have been. So if you haven't been checking out what we're doing in the Sector Secrets Mastery, that's sectorsecrets.com. We had an interesting week. I started off the week, gotta tell you, gang, tough. I had 3 day trades, 3 trades on Monday, 0 for 3. Very difficult start. But by the way, in those losses, 2.247% risk to the account. So pretty minimal risk, less than 2.5%. On Monday, we went 2 for 2. Tuesday, we went 2 for 2. Tuesday went 2 for 2. Wednesday we went 2 for 2. Thursday, I believe we went 2 for 2, if not more. And then today we went 5 for 5. All right, so what I'm trying to say is, yeah, we won. But what I want to definitely emphasize is that we never changed our strategy process indicators. We didn't abandon what works at scale, even though we had a challenging week. So that's what led to a trade like this, right? Sticking with all the things that I teach you in the free videos, right, gang? So if you think, yeah, Rog, I've seen you do this in the free videos, show me a trade. And a lot of folks said, Rog, could you show me when you got in, when you got out? So let's do that right here, and then we'll get into some of the macro implications for next week, all right? So just to give you an idea, gang, we were trading Russell, regional banks, QQQ, Dow, and bonds today. So like I said, I was super active today. And all of this activity happened in the first 65 minutes. So you say, Rog, I don't want to day trade all day. Guess what? Neither do I. This was basically a window of entry between 9:30 and 10:35. That's the bulk of when I want to do my trading. So if you think, yeah, Rog, I can do that. I may not want to day trade all day, but I've got that hour in the morning to put on 2 to 4 trades. Today was 5. So just to give you an idea of when these were built. So Pingala, if you don't know what that is, it's a level that we calculate in the first 5 minutes after the bell based upon a Fibonacci range, okay? And that's what this green area is. It turns green once price action gets above it, all right? So we take a look at what's going on with the initial move to the upside. I'm not going to chase that. I'm not going to run out to the limb of the tree. There's the Pingala test, and actually we're right there with the hourly price movement range as well. That's where we get long calls. And just to give you an idea, when I talk about long calls, what are we talking about? Well, the QQQ 364 call, today's expiration, $1.65. So this is $165 that we paid per option. Now ask yourself, scalability, how many contracts can you buy if an option is $165? Well, that depends on your budget, right? So the way that we think about it, and I want to get into a little bit of detail with you all here today. The way we think about it is, let's say my budget is about $3,400, which is what it is right now for the aggressive trigger. $3,400 worth of $165 options allows me about 21 of these things. So in this area, I'm allowed to buy 21, okay? If you have a smaller budget, you buy fewer of them. Let's say you think, Rod, I can spend maybe $500-600 on these options. No problem. That gives you the latitude to buy, 3 or 4 of these things, right? Give or take what your ability is to scale into numerous contracts. Okay, as we closed out the day in the QQQ, now granted, we've gone to break even, we'd scale it out, and then finally we just get out of the last bit of our position based on time. The 364 calls, right? For many of you that saw this was a 2.5x trade, meaning what I paid By the time we were rallying up into the cutoff, we were able to see a 2.5 multiple of it. So over $4, right? From 165 to over $4 per contract. Yes? So when you think, okay, Rog, I didn't take the entire trip for the $4, but I took about 7 of them for the full ride, right? 7 of them for the full ride. That was $2,800 on basically 1/3 of my position. Now add that to scaling out before. So these end up being pretty good days if we know how to scale out, scale in, and let the trade work in our favor. And that's a really important thing, gang, letting the trade work when it's moving in our favor. So someone said, okay, Rog, how do you scale out? We start scaling out as price runs into different obstacles, right? It could be the hourly price movement range. It could be just after getting in initial resistance levels, right, that we're running into. And then finally, time, 3:50 p.m. Eastern. I usually want to be out, boom, by then. Okay, so that's one example. We did something similar in our IWM, KRE, TLT, XLF, right? And QQQ is one of the trades. Here's the XLF throughout the day. Again, overall moving higher, get in on the pullback, and then allow the trade to work in our favor. All right, so that's something else. The other part is, hey, we had the FOMC today. So I don't want to lose sight of the fact that we finally got some information from the FOMC, meaning what is it that they have in mind. So I'm going to show you all how to measure the FOMC. Really easy, how to chart it. All right, Google CME Fed Watch. I'm going to do this with y'all. Google CME Fed Watch, and the first thing you're going to get is a CME Fed Watch tool. So whenever anyone's out there talking about what they expect the Federal Reserve to do, believe me, gang, they're just looking at this thing, and you can do it too. You don't need some talking head on television to tell you what's going on macroeconomically, because this is a perfect synthesis of it. All right? So as we take a look at the December meeting, if anyone says, oh, we could hike in December, very unlikely. We could also see aliens come December 13, right? So this isn't about could or should. This is about what is expected. 95.4% as we end the day on Monday for a hold. So we're not going to see another rate hike, gang. And I say that with such confidence because unless we have some crazy sky-high indicator telling us that inflation is out of control, the Federal Reserve is not going to hike. Because the employment picture does not look so good. So bad data does tend to get the Federal Reserve to pause. All right. January, 90% nearly pause. March, 65.5% or 65.7% pause. Another 26.8%. That's a cut. That's a potential cut. Is it the most likely? No. This is in first place, second place, third place. We rank it as such. Are we likely to hold in March? Yes, but that cut, that's a whole lot more visible than it's been in a while. All right, we move on then to May. All right, this is where it's tough to be bearish, gang. This May meeting has taken on a little bit more importance because finally we're seeing this column, the 5 to 5 1/4 column. This is less. This is 25 basis points less than where we are, which is right here. So while it's not overwhelmingly a cut, it is definitely the closest we've seen to a 1/4 point cut. So that's May. Come June, that cut is basically fully discounted. All right? By June, we are going, by the June 12th meeting, this target rate probability, the Fed Fund futures are telling us we're going to be down already at 500 to 5 1/4 basis points. Okay? So that's already baked in. This is very, very supportive to a number of things. One, it's really supportive for, let me bring up the charts, the 6E should be heading up while the dollar heads down. 6E is the euro. So if you're waiting for a weaker dollar, this is the path. Take a look at the euro. It's going to continue to move higher. Huge move on Friday to the 200. Continued follow through above the 200. at 10 through really 107.60 would be very, very bullish for euro, bearish for US dollar. What about bonds? That relentless downtrend. This is the first time in many months, gang, that we're starting to see a neutral wobble, so possibly a break of the downtrend. Now, we're still further below the 200, but this is the first step. This is the second step to continued expectation for lower yields as the ZB long bond and the ZN 10-year are making some significant moves. In fact, the ZN's already confirming that break of the previous downtrend into a neutral. Now, we've been here before, early September, late August, but this is on the heels of that data that I'm showing you with the Fed Fund futures. All right, what about gold? This is looking bullish, gang. This is not just geopolitically now driven. We are now getting lower yields contributing to gold support. Now, the reason I call this video "Don't Call It a Comeback" is because NASDAQ stayed above the 200. NASDAQ never went into a downtrend. This is the relative performer amongst the Russell, S&P, Dow, and of course the NASDAQ. The three cylinders of the NASDAQ remain pretty darn strong, emphasis on XLK. The big news for traders looking at S&P to start playing catch up. S&P has managed to close above the 200 with, here we go, the financials trying to break the 200. We have not closed above the 200 since we broke it back in late September. So this is going to be a significant move because if XLK stays strong and XLF can get moving, that is very bullish to the S&P, and then it will also be pretty darn bullish to the Dow, which is also now trading above the 200, but this time with financials, its number one weighted sector, joining in. This is a really big week, gang. Macroeconomically, we can see why there's more optimism. Dollar weakness, lower bond yields, stable gold. These are all the things that as we go into next year and wrap up this year, those corners of the equity markets that have been strong will likely stay strong, but I would still remain fairly bearish in the Russell, in regional banks, and in healthcare. Or another way of looking at this is leave these alone, focus on the NASDAQ, and focus on tech. Focus on uptrending stocks that are in tech for now, and let's see if financials can maintain that perch above the 200. Big week, gang. And here's what I'm seeing that's keeping me as bullish as I am, but in specific spots. All right, gang. I'll see you in the next update. As always, thanks so much for watching. Smash that like button. Leave your comments. Leave your questions. I answer them personally. And thanks as always for your time.